Welcome to the First Time Homebuyer Workshop. I'm Julie Marion, and today we're diving into a hot topic that's been buzzing in the news, First Time Homebuyer Tax Credits. Here we are all about giving you, First Time Homebuyer, the knowledge to make informed decisions because let's face it, when you're buying your first house, there's no way you could possibly know everything about the 5 different professions involved in the process. And these professionals each have their own standards, licenses, products, and expertise, which makes it overwhelming. So we break down these complex topics into digestible videos so that you can learn in small bites. Acorns of knowledge, I like to call it. There's so much to know and consider when buying a house, and ideally, you'd start watching these about 6 months before you even start your house hunt. Here, we are passionate about helping you, and all of this content, in addition to our paid workshop, the First Time Homebuyer Workshop, are acorns of knowledge for you. 50% of first-time homebuyers experience Homebuyer's Remorse, and in November 2023, a staggering 92% of all homebuyers said they experienced some level of regret, whether it's their first home or second home, an investment property. That's why I'm here to help you become empowered and savvy. Today we're talking about first-time homebuyer tax credit, and first off, let's talk about the major proposals out there and how they might work for you. So let's straighten out a few things as you may be watching this video after the election of November 2024, and that's okay because these proposals come around all the time, and it doesn't matter if one person was elected and the other not, because the idea is always being floated. The key is pay attention to what Congress is doing, and when you are in the zone of buying your first house, tax credits might work for you, but it's not a reason to buy the house. I will say, and you will hear me say, the perfect time to purchase a house is when you're ready. Then, if the tax credit is available, execute. Inevitably, these questions are going to be, do these proposals really move the needle in terms of first-time home ownership? And to gauge whether these proposals will have a real impact on home ownership rates, we can look to historical precedents. After the 2008 housing crisis, the federal government introduced a tax credit under the Housing and Economic Recovery Act of 2008. The credit initially provided up to $7,500 for first-time buyers and then increased it to $8,000. According to research by the Federal Reserve, the credit contributed to a surge in home sales during 2009 and 10, particularly among first-time buyers. However, economists noted that the long-term impact on home ownership rates was limited. Once the credit expired and sales and prices fell back, indicating that while the tax credits can spur short-term activity, they don't lead to sustained increases in home ownership. Now, President Biden has had a proposal out since 2021. And the details of his first-time homebuyer tax credit include that the prospective homebuyer must not have owned or co-signed on a mortgage on a home within the past 3 years. That's pretty standard. The buyer's modified adjusted gross income must not exceed 60% of the area median income, AMI. I'm going to get to that, with variations in income thresholds for joint filers. Also, the purchase price of the home must not exceed the median price for the area. The property must serve as the primary residence. So his proposal is really about income limits. Now, for grins and giggles, let's compare Donald Trump's campaign proposal. His tax credit would grant first-time homebuyers a $5,000 credit, and the idea here is to stimulate home ownership, making it more affordable for people entering the market. This credit would be non-refundable, which means if your tax liability is less than $5,000, you wouldn't receive the full amount as a refund. It's important to note that this credit would be available to all first-time buyers, regardless of income. That's a contrast to what Biden proposed. So it's widely accessible. Then Kamala Harris introduced the 2023 LIFT Act, and the details as to that relates to her first-time home buyers in the sense that her proposal offers $15,000 tax credit. Specifically, her plan caps a credit for single filers making under $125,000 or for married couples less than $250,000. It's designed to benefit middle and lower income families, aiming to close that wealth gap and make home ownership more equitable. Harris's credit would be fully refundable, meaning that even if your tax liability is low, you could still receive the full $15,000 as a refund. Here again, there's a few key definitions. If you don't know what an area median income is, I was going to do a content piece on this, and I might, but it's a little boring. So, maybe you can look it up, and where you go is to the AMI lookup tool, fanniemae.com. And on there, you will see this disclaimer, and I want to quote it. It says, "This service provided is for the sole purpose of showing applicable area median income AMI for each applicable census tract. Lenders may use the AMI limits for purposes of determining income eligibility for Refi Now and Home Ready or other loans that have AMI requirements. Each lender must determine borrower and loan eligibility in accordance with the selling guide and its lender contract. Nothing in the service is intended to vary or modify the lender's obligation under the lender contract and desktop underwriting. And they will determine the eligibility of the borrower's address for the Home Ready First loan, and the AMI tool provides only a quick preliminary indication of address eligibility." So basically they're saying use this as a guide, but all the other rules apply. Now let's switch gears. Housing gurus talk about why housing is so expensive and if these tax credits really move the needle. Therefore, you really have to compare market conditions of supply and demand. Comparing the 2008 tax credits moving the short-term housing market, you have to then look at the market conditions to understand the housing market of 2008 is significantly different than 2024. Currently, the primary issue facing first-time homebuyers is not just affordability, but also supply constraints. The U.S. is experiencing a housing shortage, with estimates from Freddie Mac indicating that the country is short 3.8 million homes. We're short. And sometimes I just sort of roll my eyes because I think, really? Is that what we're really defining what homes are? What is the definition of home according to the federal government? Are they talking about single family homes? Because not everybody needs to live in a single family home, nor do they want to. But I do think that the majority of humans they are talking about is a single family home, not a condo or a flat. And everyone's definitions of home is different, like I just said. One of the urban planning issues facing the planning industry, I think, is a serious conversation of the conversion of these huge office parks and malls that are going bankrupt and are left idle because consumer shopping has changed. The powers to be argue that it's too expensive to rework the malls and accommodate the necessary plumbing and electrical demands. But humans can't make more land. That is interwoven into the urban fabric of an area. And that is one reason I have faith in the architects and the planners. Where there is a will, there is a way. It just has to be economically sound, and it has to be a great opportunity. Opportunities abound everywhere. Moving on. How to use these tax credits to work for you, something I call a workaround. Now, we know what has been on the table, and since most likely the politicians won't deviate much from the proposal, it takes some effort here to sort of think outside the box and note that this is a highly personal decision. I'm not giving you any advice. I'm just sort of showing you, and then you make your own decisions. So in terms of your income, on the one hand, the bank wants you to show the highest gross income, which is a bad idea for so many reasons. We'll go over this in the First Time Homebuyer workshop and other content pieces. But for the tax credit, which is what we're discussing, you want the lowest AGI, or you want to manipulate how much of a tax bill you would have come April 15th for the previous year. So this is what I'm speaking of. Under Biden's proposal, there were income limits, and it's based on the adjusted gross income of the area median income. So you need to look at the Fannie Mae number and then see where you are. If you are close, then you need to run those numbers to see if you can qualify. And for Harris's proposal, that is also based on adjusted gross income to see how these are not very different. So hers too is based on income, and it would have to be the adjusted gross income because the credits are claimed on the tax form. So you have to see if you're close. What's interesting and maybe a workaround for your situation, and I can't tell you how many times my first time home buyers had this happen where there were two buyers, but one's credit score was so low, they dropped one of the buyers off the mortgage and just use one buyer's income to buy the house. And it worked because there was enough of a down payment, which we cover in another content piece. But sometimes you're just looking at these situations and you can creatively apply the benefit in a personalized application. Now let's consider Trump's proposal, which was a $5,000 credit and would be non-refundable, which means your tax liability has to be less than $5,000 or you wouldn't receive the full amount as a refund. That idea of a credit would be available to all first-time buyers regardless of income, making it widely accessible. Now the thing about this is you need to owe the government more than $5,000 at the end of the tax year. So what you need to do is figure out the deductions for your gross income to net income and see what you can lower so you owe at least $5,000 in that proposed tax year. And you need to be right on the money or you will end up owing a lot of tax. The other thing is you need to make sure you are really going to buy in that year, that when that credit is available. It can't maybe I'll buy. I remember one time my granddad had to pick up a friend at the airport, and so his best friend, Pete Lucky, and him decided to drive to the airport the day before so they wouldn't screw it up on the day of the pickup, and they called it their dry run. I think this is a good time for you to apply my granddad's dry run philosophy here and see if this will work for you. So that is step 2, my friends. Step 3 is to claim this baby. Form 5405. This is the form used to claim the first-time homebuyer credit, and you'll attach it to your federal return. You have to make sure you're a first-time homebuyer. It means basically that it's your primary residence and you haven't owned a house in the last 3 years. You'll document your income, and this is personal, so run the numbers and double check 2 or 3 times. You have to provide all the property details, the date of purchase, the price, and the address. The key is to ensure the IRS that you have met all of the criteria. Carryovers. Depending on the details of the credit, there could be a carryover, but don't count on it. You will know if there is a carryover because you are now following Congress's actions. Then also you need to make sure the effective date, like we said at the top of this, Biden's proposal has sat since 2021. So just because one branch of government has approved it, it doesn't mean the others have, and the devils are in the details, so double check. All right, so that is the credit, but 2, don't forget your property taxes and interest on your mortgage is also tax deductible. This is why you need to be very familiar with your amortization schedule and the property tax situation for your personal finances. Finally, home ownership has been one of the most effective ways to build wealth in the U.S., particularly for lower and middle income families. According to a 2020 Urban Institute study, home ownership is responsible for a significant portion of wealth accumulation for the middle class. Homework, yes, you've got some. Start paying attention to what the Federal Reserve is doing, especially their meetings and any reports on the economy, inflation, and interest rates. This will have a direct impact on your mortgage and overall home buying experience. We are going to dive deep into the Federal Reserve and how it affects you for the next content piece, and I can't wait to help you manage this and get a game plan together. If you are ready to take control of your home buying journey, we invite you to join our free mini Homebuying Chaos Unwrapped course on our website. Until next time, from the team at the First Time Homebuyer Workshop with Julie Marion, bye for now.